Hey, good morning, everybody. Welcome to Syndication Attorney's free monthly podcast and YouTube stream, where we talk about topics of interest to real estate syndicators and fund managers with the opportunity for live questions and answers before we sign off. I am attorney Kim Lisa Taylor. Before we get started, please note that this event is both recorded and will eventually be streamed on YouTube via video and will be used for future promotion, posted on our website or in a broadcast available to the public. You can ask questions at the end of the broadcast, either by raising your hand and we'll allow you to speak, or if you don't want your voice recorded, you can type your question into the Q&A. So we do encourage everybody to think about that. You can raise your hand at any time. We'll get to them towards the end of the call. And we love to have questions from our audience. So I think that's one of the things that makes this podcast so special is we have such great listeners and great attendees. So information discussed during this free broadcast is of a general educational nature and should not be construed as legal advice. And today we are talking about how to avoid losing money in today's real estate market with two great friends and great real estate trainers, Jen and Stacy Conkey. So welcome, Jen and Stacy.
Oh, thank you for having us.
Yeah, thanks for having us, Kim.
I'm so excited. I love to see women in the space. We're few and far between. There are a few women out there, but sometimes we're more in a supportive role, but you guys take the lead. I like to think I take the lead.
You do.
You do. You do.
Anyway, so I think it's great that we can do things that help everybody, and that I know you guys have a lot of really loyal followers. But I'm happy to interview you and find out your secret sauce. So let's see. So Stacy and Jen have over 20 years experience as entrepreneurs and real estate investors. They know what it takes to identify deals and make offers on properties that will build a long-lasting wealth portfolio. They have taught thousands of people across the globe what it takes to succeed in multifamily real estate investing over the past 10 years. And during this episode, I'm going to see if we can get to the bottom of what makes their program special and what makes their students successful and them successful as real estate syndicators, so that you guys can all learn how to be like Stacy and Jen. So how'd you guys get started in this industry?
Yeah, that's a story, right? We got started 20 years ago, but we didn't know each other at the time. We didn't meet until 2015, but I got started doing single family flips and wholesaling while working in corporate America. I worked in corporate America for about 22 years. And the 12 years when I first started, it was just a grind of trying to flip for profits in California, where there wasn't a lot of profit. There was a lot of capital put out, but not much return coming back. And it was really another job. And it all started because my brother decided to come over and ask me to go to the store, and we drove around for 6 hours. And before I knew it, 6 hours later, we were at his house creating a business plan to do it for a living. That 12 years flew by, and I didn't really make a lot of profit during those 12 years. It was a grind. But in 2015, when I first met Stacy, and she started talking about, she also lived in California at the time when she started, but she was doing it remotely. So I was like, man, I got to date this broad more. I got to find out what her secret is. So that's how we ended up meeting and really just dialing in what that process looked like. So I'll let you tell what your background is. But
I got started. I read Rich Dad Poor Dad, right? Like so many people start with that, and I was like, oh, that's so logical. My background is accounting, so I like things that are logical and make sense. And so I just started trying to learn more about it. Went to investor clubs and went and paid for a very expensive education that was really quite awful. It didn't teach me very much, but it just allowed me to get enough confidence to get out there and start trying it. So I did learn very early about remote investing, because where I lived, it was very competitive and very expensive. And I didn't have much capital when I was getting started. But my path kind of took me through single family homes, small multifamily, the small apartments, and then a little bit larger apartments. And here we are today. We really like to focus on, for smaller buildings, we do joint ventures. And then we get to a point where it's not realistic to have only a few people fund a deal. Then, obviously we would fund that through doing syndication. So.
Yeah, excellent. That sounds like a great business model, because I really do think that there's times when you should be syndicating, and then there's other times when other structures work for you, but it really only works to joint venture on those smaller deals. And in fact, I have a rule of thumb, maybe, and I'd like to hear your thoughts on that. My rule of thumb is no more than 5 people in joint venture. What do you guys think?
The same. Yeah, I mean, people ask us that all the time. Well, how many people are you allowed to? And I'm like, it's not about allowed to, it's not cut and dry. I said, but if you call and talk to all of the top attorneys in the US, they will say something very similar, which is, I'm really only comfortable up to 5, because the reality is, does it really take 8 people to run actively operate a 20-unit deal? It doesn't. So it's not going to pass the sniff test with the SEC. Right. So that's exactly what we do. We say 5. It's not a hard and fast rule, but plus you got too many chefs in the kitchen on top of it. So there's a lot of reasons. I've had so many stories over the years from dealing with clients, because people use joint ventures on many different levels, to buy property directly, to manage a syndicate or a fund, whatever smaller purpose that you're raising money for. But when you get too many people, I always say 6 and more is a lawsuit waiting to happen. Actually, worst case scenario was some clients that had a deal under contract, and they probably spent more than $100,000 getting that all the way to the closing table, and immediately ended up in litigation right after closing, because one of the partners, and one of the management decided that hey, I didn't cut out a good deal for myself, and I deserve something more, so they took it out of the bank. And oh my gosh.
Oh wow, that's bad business.
Yeah.
Wow.
So that one suffered because they litigated. And so, the investors didn't get as good of returns as they would have if they hadn't spent hundreds of thousands of dollars in legal fees.
Yeah.
And, and litigation is, I used to do litigation, and it's horrible. It's a nightmare for everybody that's in it. And the only people that win are the attorneys that represent the parties. I swear that's the way that the system is designed.
Yeah, we've heard that before.
Yeah. I don't have any experience with that. I don't intend to.
Yeah, that's nothing.
I'm just going to listen to you. Yeah.
God would.
But just, we're kind of getting a little into a segue here, but I do want to say something, and this has come up a lot, because we're in this digital world where people think that they can do everything digitally. We can do everything by text. We can do, we can develop relationships by LinkedIn, by Facebook, by social media. We don't ever have to talk to people live. And there's actually studies that show that people, there was, when I was in law school, a study that showed that people who were only allowed to communicate electronically, all their matters escalated and went to litigation. People that were allowed to pick up the phone actually resolved their matters.
Wow.
So
that's very interesting.
That is.
I'm not surprised, but wow, that's wow.
So, SEC doesn't believe you can build relationships with people without having live conversation. So it doesn't have to be face to face, but at least phone, Zoom calls, something more. So, for all of us out there that are kind of thinking we're in a digital age and we don't have to talk to people anymore, it's not true. If you want to be in this business, you want to be successful in this business, you really have to engage with people on a personal level. So
it's such a relationship business. Like, not even the legal part aside, the relationship part of it is critical.
It is.
It's critical to success for continuing on. I can't fathom ever investing with someone or having someone invest with me that we've never talked. That seems crazy.
It does seem crazy, because
risky.
Without that personal connection and being like making them a priority makes them want to connect with you, and making them a priority also helps you make sure that they have their investment secured. So I just don't know how you could do that without having a conversation.
All right, so this is like totally deviating from our questions, but I think it's such an
that's okay.
Tell us,
we love the ad hoc. It's okay.
What do you guys think about like mindset? What's your thoughts, and how do you teach your students mindset?
I love it. I feel like this is a softball question. Yeah. So mindset is 80% of anything that you do in life. That's our philosophy. So it's 80% in business, relationships, everything. It starts right here. So it's 80% of it. And then the other 20% is the how. It's what you're going to do. It's the actions and implementation. But without that 80%, and having a focused mind, you can really, really hold yourself back. So what we do is there's 5 primary reasons why people will quit or not engage and move forward. And the very first one, and it's the first domino that knocks over the other 4, but the very first one is the wrong motivation. So I always, in our academy, what we do is we really try to find out when they come in, what's their motivation for doing multifamily, for going in and doing a syndication, or if it's going to be a joint venture, what's their motivation, their why behind it, and why is it a must for them? And I have them ask that 5 times so that they really get down to the root of why they're doing it. And the reason why we do it is as soon as they hit that first challenge, what you usually do as human beings is you will revert back to what's comfortable, because it's in every fiber of our being to stay with what's familiar. So when you're trying something new and you're not the subject matter expert of it yet, and you're having to learn it, that first 90 to 120 days is a critical period. It's like you're on a trapeze and you're swinging from one bar to the next, but you haven't let go of the other, and you're doubtful, you don't understand. And so you really just want to go back to what you know. And we just nudge them. It's like a professional nudge that I call it shove into, no, you got to remember why you started. And when you go back and remember why you started, there's no problem. There's no challenge that you can't overcome. And we have a mindset course where I teach them what I've developed as a resilience factor. So they assess, what's my resiliency when I face a challenge? What's the gap? And how do I develop that resiliency within me so I keep going? Mindset is everything for us. We even incorporate it at the events.
Oh, that's great.
Yeah.
That's awesome. Yeah, the first, so I've written 2 books on how to legally raise private money. Actually, one's how to raise capital for real estate legally. This one's more like an encyclopedia, the second book, but everybody should have it on their desktop. So
I have the first one. I'm gonna have to get the second one.
yeah, this one is more in depth, so it's about double the size. This one is a little easier read, and it's more of a how-to step by step. But the first chapter was all about mindset. You know, you have to realize you're not asking people for a favor, you're offering them an investment opportunity that they need. And if you think about, I'm not just doing this for me because I want to change my career and I want to have a different career path and I want to make money for my family, you're thinking about who else in my world, or who can I meet that I might be able to also help achieve their goals, their financial goals, in a way that they're not able to do in, you know, just traditional investing, and introducing them to this new world that they can be part of and participate without having to, you know, go through all the training and coursework that your students are doing, you know. So it's critically important. And so I'm really glad to hear that you guys are focused on that, because you got to flip that switch in your head or you're never going to be able to pick up the phone.
Absolutely.
It's absolutely true. And the thing is, it really is, it is truth. And I think that almost everybody struggles with that until they get that reframe, because it feels like, oh, I'm asking for money. You are not asking for money. You're not getting the money. The money is going for a real estate transaction that they now get to own. And I think when you shift from I'm asking for money to, these people would never have the ability or opportunity or the knowledge to have gotten into that deal. They wouldn't even have known the deal existed if it wasn't for you bridging that connection. And so to shift from, oh, I got to raise money I need something from them. It's like, if you can clear that energy and just be about service and truly know, if you believe in multifamily real estate, I'm assuming everybody watching this does, then you must know that the more people that can get involved in multifamily real estate, the better off all of them are going to be, and their families and their kids and their generational wealth. And so if you can harness that, it's not about you, it is about them and helping them. And yes, you will be compensated for your part in that, and which is absolutely perfectly fine. And that's how it is. But it's really about them and how you're helping to serve them and their family, when they wouldn't have had access to that deal otherwise. But I think almost every investor goes through that, especially in the beginning, like, oh man, I'm asking for money. No, you're absolutely not asking for money.
You know what? It really comes down to, when it comes to that mindset, it comes down to fear. And what they fear is that it's not going to be received, or maybe they might be rejected, and they might even fear like they're not worthy. So we've created some mindset meditation to help people get through that and work through that. It's we have it on a playlist on our YouTube channel, just I am worthy hypnosis and meditation. And I also recorded one that I'm a money magnet, and I recorded one for if you're going to pitch your deals. Because the thing is that you have to have these relationships, touching and interacting with people all year, all the time, instead of, oh, I got a deal. What's up? That's why it feels weird. Hey, do you want to invest in it? That's when it feels weird because you haven't really invested in a relationship.
Well, that, and then it's also the difference between selling something and educating someone.
Yes.
It's a lot easier. So, I mean, that's how I've built this entire business, right? I don't sell anything, right? I just help people understand what their options are, what, you know, what's available to them. And then they make the decision whether they want to work with us or not. And it's the same thing with you, with you and all of your students. It's, you know, if you can educate your investors on how this can work for them and how they can participate and how it might benefit them, then all of a sudden they're making the decision. They're raising their hand. Yeah, I want in. How do I do that? You know, send me the docs. They're asking you instead of you calling, hey, you want to invest $100,000 in my deal? And let me tell you about it. You know, it's a lot more comfortable conversation. Yeah,
Absolutely.
Absolutely. I think that for me, the big adjustment for that, for my own mindset, because it's like, well, one thing to know it, it's a different thing to be like, no, I mean, it's in every cell of my body. I'd have zero hesitancy about reaching out to anyone. And it came when we were first doing our first syndication raise. And I mean, I was nervous about it. I was like, oh man, because I still had that, oh, I'm asking for money. But as people started responding with whether they said yes or no, like it was like 99% of people, regardless of their answer, said, oh my God, thank you so much for thinking of me. Like, I appreciate that. And even when they said it's not the right time for me, they were always like, oh, but please like stay in touch and let me know when you have something else. And I was like, whoa, like, this really is of being of service. I am serving them. And that's what allowed me to really shift my mindset and be unapologetic in reaching out, because everybody says, oh my God, thank you. And thank you for following up. Like if I reach out and I don't hear anything, I'll send like yesterday, I sent out the happy hump day camel where it's like got the big lips on it. And I'll just send that like happy hump day and brings it back up. And they're like, oh yeah. Like either, oh, I can't do it right now. Or yeah, send me your thing.
Yeah, but that's how they remember you, right? And that's how you in their mind, and they're so that when something does come up, then they're going to pay attention to it. Yeah, I always tell our clients that if you get on the phone and you call somebody and talk to them and then ask their permission to follow up, now they're expecting it. Say, hey, are you interested at all? And, you know, first of all, the first conversation you have to have is whether or not they're even a right fit for the kind of deals you have to offer, right? You've got to develop that relationship. Most of our clients start out doing 506B offerings. Is that how you guys started?
Yes.
Yeah, exactly.
That allows you to bring in an unlimited number of accredited investors, up to 35 non-accredited but sophisticated investors, but you have to determine their suitability before you even offer them investment opportunities. And that means having a conversation about whether they are accredited and if they are sophisticated, you know, how do they feel like they're sophisticated enough to be able to understand the offerings that you're going to provide them with. And then, you know, you have to have that in place. You also might want to ask them questions about, hey, our deals last 5 to 7 years. Is that a good time horizon for you? You know, how much have you invested in other things? So you get a feel for, you know, do they have $20,000 to invest or do they have $500,000 to invest? They're not going to invest it all in one deal, but you don't want to take somebody's last $50,000 and you don't want to have something financially devastate them if your deal does fail, because, you know, a small percentage of deals do fail. And but it is a small percentage and people have to be able to withstand that. So that's, you know, the suitability criteria. But during that process, you're getting to know them both financially, but also you need to get to know them on a personal level, because there's dangers in letting people into your deal that you don't like, right? Or you experience anything like that?
No, well, I should say no, not ever. It's been a long time, but we learned that lesson. I learned that lesson at least pretty early. And a no deal is better than a deal with someone that is not a good fit. But you know, it's hard when you're new and you don't necessarily have the discernment or the wisdom from experience to know that it's okay to pass on a deal if he's not going to be the right partnership. But I did learn that fairly early, but I only needed to learn it once.
I learned it fairly early also. And it was with a cousin's boyfriend who he invested like 40 grand and come to find out it was 60% of his net worth. So I'm like, that was not good. And I couldn't wait to get out of that flip. And thank goodness it was just a flip. But yeah, so I learned that well before getting into larger buy and hold deals. And it was a very valuable lesson early on. The panic factor was real. So I like to know, what is this percentage of their net worth that they're about ready to hand over to me? And what does that look like for them? And are they aware of that? Do they think about that? Because that's what a savvy investor would be thinking about. Like, you've got to have safety, growth, and risk, right?
Well, as soon as they invest with you and then tell somebody else about it, they're like, oh, holy, that's crazy. Why did you do that? Those people are going to steal your money, and all of a sudden this doubt comes in, and now they start questioning you and questioning their decision and all of that. And if they're sophisticated enough to understand that, and it's not as such a significant portion of their net worth or their savings, then they're just going to say, oh yeah, and I know how to do this. I've educated myself. I'm good, and they won't even probably tell people about it that we all have naysayers in our lives, right?
Totally.
Yeah. We don't talk about business or real estate with anybody. We don't even know if we have any naysayers left in our life.
Not anymore.
Certainly for many years we did. We just kind of thinned our contact list so that everybody around us is all about it.
Yeah.
We don't have to deal with that anymore, but we did a lot in the beginning.
Or,
all of our students do in the beginning, and it's hard. That's a hard thing. You don't have any confidence yet because you're just getting started, and you got people, seeding doubts.
well, and a lot of times that happens around the holidays, right? You get together with people.
Yeah, exactly.
And family members, oh, you're crazy, you don't know what you're doing, and they think they know everything about it because of something they read or something they did in the past that's completely unrelated, and they start telling you horror stories. And so you just have to be careful about talking to those people and try not to let them bring you down, because they probably have never done what you're doing before, and they really don't understand it. And you'll never convince them. It's like we no longer engage in political conversations around the the holiday dinner table.
That's a good point.
Absolutely.
Religion, politics, and real estate is off the table unless you're of the like mind.
Don't bring that to the table. Only bring turkey and ham.
Another one that I say, don't ever talk to my husband about these things: religion, politics, or PC versus Mac.
Right.
Exactly.
Ooh, it's
iPhone versus
divisive.
Android. Yeah.
Right. iPhone versus Android. That's another one.
Yeah, exactly.
Really important first world things.
Right.
Yeah, so that's probably a good idea not to talk about those things. I mean, generally and jokingly like we are now, but actually getting into those discussions with your potential investors is, I guess if you're all like-minded and you're like-minded, then that's fine. But if you're not, it doesn't mean that, you don't want to alienate people. You don't, it's just not appropriate to talk about certain things in business settings. And this is one of those, or this is an example of that. So we did promise that we were going to say how to avoid losing money in today's real estate market. So maybe we're that topic, or these other topics are so interesting. How can you tell a good deal from a bad deal?
Well, okay. Well, a couple in the theme of how to avoid losing money or how to maximize profit, but knowing right now there's a lot of people who are about to lose a lot of money. There's a massive foreclosure wall coming because of a lot of the bridge financing that happened, and operators are going to be losing their properties. So anytime there's a time, we went through 2008, so we were around, and that was a very painful time. Yet there was so much wisdom that was born out of that time that I'm also grateful for the difficult parts of that. But one of the things that we thought interest rates are going to go up
long time ago,
many years ago. Mm-hmm. So we adjusted our business plan 4 years ago,
2019.
Thinking it was going to happen any day, and then COVID came, and that just, I think, delayed things. But
they started printing $4 trillion more dollars.
Yeah, that just was problematic.
Yeah.
But when that happened, one of the adjustments that we made in our business, and we further made once interest rates really started climbing up, is it's not just about like we will only focus on fixed rate financing. We've been doing that for a couple of years because we thought the interest rates are going to go up. But more than that, it's when you're evaluating a deal and you're underwriting it conservatively. And I know that's such a broad statement, but when people are new, and I remember it's been 20 years, but I can absolutely remember like it was yesterday, the emotion of, I just want to get a deal so bad because I just want to prove to myself that I can do this, that I am an investor. I'm calling myself an investor, but I've not done a deal. And like that desire, that desperation can make it very easy to, instead of underwriting conservatively, to underwrite with rosy colored sunglasses. And underwrite on the hopes of what it can be without recognizing the need to look at everything. Doesn't go right in a deal. It never does. Some things go right that you didn't even expect to go right. So hopefully it balances out. But the big thing is going in and conservatively looking at every piece of it. In particular, when you're taking over a property, particularly a value add, and every deal that we do and that our students do has some value add component to it. But looking at that, saying, okay, I see that there are, 3 opportunities to increase the net operating income. There's market, there's rents that are under market. There's rubs that can be initiated, and I don't know, some other random thing.
Cable optics.
Okay, yeah, it's like we can do that. It's like we can install fiber and make some money on the internet. But one of the things that I think newer investors don't think about until it's too late, and then relationships are damaged, is when I say, okay, it's 50 units, and let's say it's on average $150 a door under market value. Wow, that's an amazing opportunity. I totally want to look into that. But the reality is, you don't buy it and then in month 1 have all the rents go up by $150. That is a graduated process. There are already leases in place. You have to take into account, like, what are the economics in the area? What are your competitors doing? What's going on in the economy as a whole? So from a conservative underwriting standpoint, it's taking the time to literally close your eyes and picture, okay, it's day 1. We now own this property. What can we realistically do in the first 30 days? Probably all of nothing, honestly. Probably all of nothing, except start maybe giving some 30 to 60 day notices, depending on what the state is. So it's really looking at, like, month by month, both in the revenue area, and if you're going to increase revenue in more than one way, looking at what is the timing of that, like how quickly can we do that, and then not just being realistic, but then being conservative on top of it. Like, I think we can do this. We could start implementing these 8 leases by month 4, and then these other 6 leases in month 5 based on the expiration dates. So that's a big part of it. When it comes to reducing expenses or instituting RUBs, that's another thing, especially if you have both. If you're going to increase rents and put in RUBs, you got to think from the tenant standpoint. That's a really massive change in their financial thing. So you might need to take what you want to do on day 1 and spread it out over 12 to 18 months in order to fully implement your business model. And the reality is, it is better to take that 12 to 18 months to do that than to push it all in month 3 and lose 30% of your tenant base or 50%. Like, you will crush your deal when you push a business plan too far, too fast. So it's just like being slow and trying to remember, like, what it's going to be like on the receiving end of these increases, and just like doing kind of slow and steady wins the race, because over the 5 or 7 year hold, you're going to get all the value that you need. But take a little bit more time in the beginning and do your financial underwriting for year 1, month by month.
Yeah.
Write down all your assumptions, and then have other people on your team or outside your team question and challenge your assumptions and really make sure it's solid. I know you have some other things too.
I do. I want to add that because I want to back up a little bit, right? Because it all starts with underwriting.
Right.
It absolutely begins there, and it's a domino effect afterwards. So there's a couple of things that I look at that I would like to share, if that's okay.
Sure.
When underwriting it, you got to stress test the heck out of this deal from nine ways from Sunday. Stress test it in terms of what happens if vacancy is higher than you anticipate. What happens if you actually can't increase the rents? Does it still work? Like, put all of these factors in there with all these variables. And then when you're looking at it in those months, month by month, does that DSCR ever get below 1.4? If it does, I'm alarmed, because you also have to figure out on the exit, what happens if the cap rate goes up? By how much? Stress test every aspect of the deal before you even get into it, and then implement the plan, what Stacy said. But the thing is, rose-colored glasses, every red flag, you can't see it because everything's rose-colored. So when you're going in with these rose-colored, excited glasses and you just want to get that first deal, you need to take those glasses off and you need to stress test it. You need to convince yourself, maybe even talk yourself out of the deal. Look for all the reasons why this isn't a good deal by stress testing it to make sure you have certainty that, okay, this is actually a good deal. I've stress tested at 70% occupancy and it still works. I've stress tested it down to if the cap rate goes up to from a 5 to a 10 or a 7. I mean, realistically, it could happen, and so you've got to look at that and then really stress test it, then come up with the plan on what's going to happen if you can execute this plan flawlessly. What's going to happen if, something does come up and you can't increase the rents as quickly as you thought? What will be your contingency or your tertiary plan? So, and you have to have all of that together in your mind and on paper and as a team before really getting in there. That way, which way to move. I was a professional semi-professional poker player. And I believe you have to have outs. You have to have at least 3 outs. If you have less than 3 outs on an exit and you're stuck, and you don't want to be stuck with everybody that and care about's money. So I would say it begins at the very beginning with stress testing that deal so aggressively. That's just my 2 cents.
I think you're absolutely right. The other thing you've got to be super cognitive of is raising the right amount of money, right? Because if you
yes.
So when we do an offering, we'll do a syndicate that has a minimum amount that has to be raised before you can actually close on the deal, and it has to be enough to close the deal with investor funds. And maybe some of those investor funds are your own funds, and maybe it's more of your funds than you really want to leave in the deal, but you've got to get into the deal. But if what we see some clients do, and the ones that fail, are the ones that get in there and close the deal, and then they take their foot off the gas and they stop raising money, because we've got a target raise. That's enough to pay yourself your acquisition fee, pay back all your pre-closing expenses, pay all the closing costs, have some nice reserves, have your capital improvement budget, plus your down payment covered. That's the ideal. That's what you want. If you can raise all of that before you close on the deal, you're in golden, right? But if you can't, and you try to get in with this minimum investment or minimum dollar amount, and then you don't raise the rest of the money, you're stuck with the same property that the seller had. You're not going to do better than they did. Right. You're going to suffer. And then I see people doing is becoming acquisition junkies, acquisition fee junkies, right? It's like, I have to get paid again, so I have to go do another deal. And they really should be focusing on and raising the money and finishing the deal that they started, and then getting to that target raise amount. And then we also give a cushion. So it's a maximum raise amount beyond the target. So it's your contingency. You've got up to a year to figure out, oh, gee, we didn't know we had to replace all the water heaters, and that's going to cost us another $150,000. So we need to go ahead and be able to raise that. But you've got to be able to absorb that into your, your NOI and to your returns to your investors, because that's gonna help impact that.
Yeah, absolutely.
Don't take your foot off the gas when you close on a property.
Ever.
Raise money to your target. And always have a cushion that you can raise. You can just reopen the raise and bring in more investors if you need to get whatever you need done. Make sure that that's available to you. There's going to be a lot of people who are going to get caught by these bridge loans, is what you're saying, is because the documents don't allow that, right? Don't allow them to reopen the offering. Don't allow them or force them to do capital calls, and the investors resist and say, no, we're not doing it, not putting money in a sinking ship. And they're the ones that might lose. But those that have the flexibility and the ability to recapitalize or to bring in new capital in whatever's needed to bring the deal, they're going to be in a much better position.
Yeah, absolutely.
And that's one of the things that we make sure all of our docs have, is we try to give our clients the maximum flexibility to do what's needed to make the right decisions and salvage the investment for not just themselves, but for everyone.
Yeah.
Yeah, that's it's some interesting times coming. And I did live, we grew our practice in 2010, 2011. Actually, I started with Gene Trowbridge in 2008, and we formed our firm in 2010. And we grew our practice during that time when the market was going crazy, because all these new capital needed to come in to be able to either buy these deals or recapitalize the deals. And so it's feasible and possible to do it, but you need to have some good guidance. All right. Then you can do is kind of help people. I would imagine. Are you doing a little bit of that? Are you doing some bad deal counseling at this point in your coaching?
We actually have 0 students in our academy that are facing any any foreclosures or any issues. They listened to us for the past 3 years on don't do it. Just don't do it.
I think when your teachers and mentors have been through 2008, and and obviously our desire is to make sure that all of the difficult parts of our journey aren't the difficult parts of their journey. And it's true. We don't have a single student in our academy that's facing anything like that, any kind of foreclosure.
Instead, we've been telling them to get ready. So they're all
we were like,
poised.
let's go. It's on. 2024 is we already have a lot of students under contract on really solid deals. So we're already seeing it. We were expecting it to be a little bit more towards 2024 when we started seeing more opportunity, but it's already happening.
Yeah, it is.
On some deals. So
we find ourselves in a unique position where we are not having to coach through bad deals right now. We did have to do a lot of, for 3 years, mindset work on people be like, oh, but everybody's door count is going so high. I'd be like, that's not the metric to focus on. It doesn't matter how many doors you have. Okay. You need to make sure it's the right amount of doors. It's the right deal. It's the right financing. That's all you need to worry about. And you're going to see what's going to happen for everybody that's going ham on deals right now and trying to get into this bridge loan. Just don't do it. And now they're poised.
It's the bridge people that did the bridge lendings. Those are the ones that are maybe going to get caught short, right? Because they've got a short term on it. It's hard to get those refinanced out unless you bring in more capital.
I don't think anybody even we didn't expect it to get
this fast,
this fast. Like I knew it was going to go up. I didn't know it was going to go up that fast, but no matter what, I'm so conservative. I was like, I don't want anything that's not a fixed rate. I don't care if I have to pay a little bit more. I want this security. I don't want the stress. I remember the stress, 2008. I don't want that. And it's funny because, between Jen and I, and then we have 3 coaches, and our coaches all have 17 plus years experience in multifamily. All of us were in 2008. Like all of us went through it. So I think the reason we have no students with any issues on any deals is because they don't come to us after they've already been doing real estate. We kind of cater to people who are brand new or just getting started, or they've got one thing and they're trying to learn to scale. So really early on, the foundations that we lay with them. And then not only that, they're coached every week. They have a one-on-one coach. We have group coaching. There's all of this. So during the entire process, if there were any red flags that came up, us or one of the coaches would have been like, hold up. So I think that's why no one's in any bad deal, because we were with them the whole time, and we can see a red flag 20 miles away because we lived it. We've been there. We made the mistakes. Right. We don't want them to make them.
I think still puckers.
I think that's why we don't have any students in those, is because they've not just been listening to us, but we've been working with them. And we're not shy about telling them our hard stories. And part of why I'll tell them that is to scare them on purpose, so they don't do the dumb. I don't say do the dumb thing, but I don't want them to do the dumb thing that I did 18 years ago and or 16 years ago and end up in pain because of it. So our people are in a really good position, which is that was the whole point. That's what we wanted when we built it, was just to make sure that people who are starting off, this new generation of investor that's starting and wanting to scale, that they can do so successfully. Because you have one bad deal, if it's big enough, you literally people will generally just give up on real estate. Even if they believe in it and they wanted it so bad, you get kicked in the stomach hard enough, you just take your tail between your legs. And there was a guy I talked to in the summer when we were at Zion. I was talking to him on the phone, and he still has not done a deal since he lost his multi-million-dollar portfolio in 2008. And I was like, dude, like, you got to get back on the horse, but there's a way to do it right. Like, we can help you with this. And it's such a sad thing for me to see people who literally will give up on any kind of wealth building for themselves and their family because of what a bad thing it is. So our goal is to make sure that as many people as possible know how to do it right. So even if you make a mistake, if it's a little one, you could recover. A big one, most people just won't psychologically get back in the game. And that's,
we are have some of those counseling sessions with with people that clients or even potential clients, and we're happy to do that. If someone does have a deal that's in trouble, we can start examining what they have, what's in place already, and help them figure out a strategy, which might involve getting permission from their investors, depending on what their documents say, or maybe even from the lender. But there are workarounds. There are some strategies. Some deals can't be salvaged, but there's also some groups of people that are coming to us and saying things like, well, we had something fail, but now we want to try to make it right. and we want to try to, move forward and figure out a way to bring those investors into another deal and give them maybe a part of our earnings so that we can make them.
Oh, that's so good.
That's awesome.
That is,
Yeah.
like, that shows so much integrity.
Well, those that do that and actually have that story to tell later on, yes, we had a deal fail, but here's what we did. Here's how we
Yeah.
saved the investment for our investors. And, they have a fantastic story that is so much credibility. But, those that, stick their head in the sand and disappear. Actually had somebody that knew someone that got in trouble with a deal. And I think they got the worst legal advice they could have gotten, which was, cancel your phone number, cancel your email, move out of your office, move out of your apartment, and disappear. And, that person, had they not taken that advice, had I had a chance to counsel them, I would have said, no, don't do that. And they would probably still be doing what they were doing before. But now I don't, haven't heard from them in a very long time. So I don't know what they ended up doing, but I don't think they're doing this anymore. So
Totally not. And what's the quality of their life having that monkey on their back? Like, you can never, how do you ever like shake that off?
yeah.
If you don't, I wouldn't want to go through it. That sounds awful. We never had anything that bad happen that we would like want to like disappear. But like the process of going through a difficult situation and working through it, and psychologically, emotionally, mentally, financially, it brings you to a really different place, which allows you to better serve your future people. But you just duck and run and hide. Like, what is the quality of your life ever for the rest of your life?
And it's just like you guys, hey, I went through this stuff. I made those mistakes. Now I can teach other people how not to make those mistakes or how to get through it if it happens and how to manage it. So I think that's so critically important. So let's think about, we totally have not gone through our list of questions. the conversation that we've been having. So I'm not at all sad about that.
It's good. We prefer, it's cool. It's just casual.
Sometimes it's easy to ad lib when we've got great guests. All right. So here's a question. I often tell potential clients, if you're making, they'll come to me and they're like, we've been looking at this deal for like the last 2 weeks, and we think we're going to make an LOI on it. Okay, so how many LOIs should somebody be sending out? Is this kind of a numbers game, or should they send out LOIs for the price they want, or even if it's not the price the seller wants? What's your thoughts on that?
Well, I mean, it is a numbers game to a point. I feel like you've got to be in the game. You've got to get the repetition of analyzing, underwriting the deal and knowing it. If you're not at least doing 25 in a month or 25 in a week, then you're not going to, and I don't even know if you'll have 25 in a week right now, but if you could, right? Maybe 25 in a month. But if you can, that's going to give you the repetition on underwriting and stress testing and figuring it out. And I would absolutely tell people, do not just make the arbitrary offer that the seller wants. You have to make the offer that makes sense, that's penciling out for you, whether the seller wants that or not. Your offer is whatever makes the deal work. So for me, I think 25 deals a month, if you're analyzing them right now, like before I would have said to do more, but in today's world, if you're analyzing those 25 and really truly stress testing them in a way that this deal makes sense for me at this price, this is what I'm offering, do it. But don't feel compelled to meet the seller where they're at. If the deal doesn't make sense at that number, do the number that makes sense for you and have the confidence and certainty to let that LOI go. But don't ever compromise and increase the price just because you feel bad or whatever. You need to make sure that the deal works. So I think analyzing 25 deals a month, you might get two LOIs, maybe 3 LOIs that make sense out of that number. And I think that that's actually pretty optimistic.
But the story there, and what I hear often is, we're analyzing 1 or 2 deals a month, and that's what you're never going to get.
It's so long.
Yeah, this is a 10-year process before you get to your first,
right?
And you're going to give up long before that. So you really need to step it up.
Yeah, you need the reps in.
That, I think it has some additional benefits too, because like, especially when somebody is new, that submitting that first LOI, it's the most terrifying thing that exists on the entire planet. You'd rather be eaten by a shark than, submitting your first LOI. It's terrifying. So one of the things that we'll tell our students, like, we don't we don't encourage them to submit a bunch of lowball offers, because that's not going to be great for the relationship with the broker. But there are times where there's just there's like an emotional component or a mental component where they're just not moving forward on something, and it's like, look, here's what I want you to do. Like, write up the LOI at whatever the price is that makes sense. And you know that it makes sense because you underwrote it. No matter what, if any experienced or knowledgeable investor looks at that deal, they're going to end up landing at the same place you did. So have that confidence, but have a conversation with the broker. So you can still write up the LOI, but it's not because we think the deal is going to be accepted. Like, we know for a fact there's no way, it's way too low, but just talk to the broker and be like, look, I know that this is so much lower what the seller wants, but let me help you understand from our perspective why. So even though that LOI is not going to go anywhere, what it does is it allows you to, it's not necessarily a flash roll, but to establish credibility with the broker, even if it's the first deal and they don't know it's your first deal. Say, these are the factors that go into that. So this deal is probably not going to work. I wrote up the LOI anyway, just to show you that I told you I would submit it. I don't expect you to present it to the seller. If you want to, fine. But I did want you to understand, like, this is what it will look like when we submit an offer. And here's some of the criteria we look at. So this one isn't working, but let us know as you come across other ones, because we are serious. We want to purchase 3 properties this year. And it allows you to, as a brand new investor, establish credibility, because just sending in the LOI, the number's so low, that won't do it. And then not doing anything is worse.
Yeah.
Because now they think they did all this work to give you the offering, the memorandum, and give you information about the property. And then you just ghosted them. As far as they know, they don't know that you just kind of analyzed the deal and it didn't work. So taking the time to get back to them is what's going to make it possible for you to get more deal flow. Which is why, we don't, our students, if they're doing 1 or 2 deals event, that would be like, you must be joking, right? What are we trying to do here? Because it is just a numbers game, but you can get so much more out of each deal that you analyze by taking it that next step and showing them that you are serious, you're taking action. It's just the numbers don't work.
And it's also showing them how you think, right?
Oh, yeah.
How you think through it, and what your box is and why. And that makes it even better when they find those deals and they know, okay, this person thinks through it.
Mm-hmm.
They're not just being cavalier with this. They actually have a methodical process, which it makes them, you stay at the top of their list when you do it that way.
Yeah. They know they're dealing with somebody savvy, even if you're new.
Yeah.
I mean, assuming you have enough knowledge that you do know how to underwrite. So that is an assumption, but yeah, that's how we look at it. It's totally a numbers game, though.
Yeah,
because most of the deals out there are not deals.
If you're analyzing 25
deals.
deals in a month and making 1 to 2 offers, that's 12 to 24 offers that you've made in a year. The chances of you getting 1 deal or 2 deals done in that year they're higher if you're analyzing more deals and getting the reps in.
Yeah, because you never know when you're going to find one. You just gotta be talking to
ready.
people, and
I feel like we could go on for another hour easily, but we do have a commitment to our guests that we will end at the top of the hour, and we want to give people an opportunity to ask questions.
Sure.
So if you do want to ask a question of me or our guests, please raise your hand in the Q&A, or either raise your hand or type it in the Q&A. You've got either opportunity. Happy to answer your questions. Just in case you don't know, you can get a physical copy of one of my books mailed to you. All you have to do is text the word syndicate to our phone number, which is 844-796-3428. And if you're looking at your phone, it actually spells 844 syndicate, SYNDIC, and the number 8. Sorry, that's my dog helping put in his 2 cents here. But text the word syndicate to our general phone number, 844-796-3428. Let us know. You're gonna answer a question. Have you raised capital before? If you say no, you're getting this book because that's more appropriate for you. If you have, then you're gonna get this book. So if you already have this book and you want the other, go ahead and just say you've raised capital, and you can have it on your shelf. We want you to all to have these resources available to you because they will help you tremendously. You can read the reviews and you'll see how many people that have been helped by this. So before we go to Q&A though, Jen and Stacy, you guys have an event coming up. Let's talk about that.
Oh, yes, we do. February 2nd through the 4th, we have WowCon. It's the Warriors of Wealth Conference. It's epic.
It's so epic.
It's so epic. You're actually going to be speaking there. So
That's
Kim will
right.
be there as a speaker on day one. We also have Julianne Peterson that's going to be speaking there on day one. We've got Ron White, who's a brain athlete. And he's coming to speak on day two. And what he's going to do is he's going to teach you guys how to memorize people's names as you're meeting them, because it feels so awful when you first meet somebody and as they're talking, you're like, crap, what was their name again? I don't know if any of you have that happen, but I do. And then all the time, right? Like, we're human, it just happens. But he has a very specific methodology to teach you how to memorize people's names so that you can connect with them in a meaningful way. And instead of freaking out about, oh my God, I didn't remember their name, you'll actually be able to engage in the conversation comfortably. And it's just amazing what he does. He'll be able to come in and teach that. And then you can go out and raise capital and network and get to know everybody's name in the room using his methodology. We've also got, we have people that are coming. Rebecca Weaver is going to be coming and talking about performance management, specifically how to manage remote teams, how to manage your team that's maybe boots on the ground, what to be doing and having performance conversations with property managers, contractors, if you're doing rehab, just the framework to have a conversation when performance isn't being met and to get people back on track with projects. So that's going to be cool too. I think on day 3, we're going to be doing mindset work. So I'm going to be walking everybody through, why is multifamily a must for you? What's going to get in your way? What are your biggest goals? What's your audacious life that you want? And I have everybody draw it on the board, on a 1-inch board. It's like, we're going to break it. So what we do is we have you draw your ideal life and everything that you want and how you want to be feeling on the front. And then on the back, I have you write everything that's going to get in your way that you can think of. And then you come up on the stage with me and you put all those limitations that you think are going to be in your way facing up at you. And you read through those and you're like, no, this is not happening. And you just smash through the board. And it's a symbolic activity where you break through and realize, you know what, it's so illogical that I believe these things. I actually can do this. And I have done a lot of things to kind of rewire your beliefs along the way throughout the event so that you step into the identity of somebody who's just unstoppable and going for it safely.
Wow, this sounds like an amazing event. Okay, so where is it and how do people register?
So go to wowcon.com. It's WOWCON.com. And it's in Orlando. February 2nd through the 4th.
Okay. Yeah. So it sounds like everybody has to be there. I mean, this is amazing. Just learning how to remember people's names. I live in 3 different places. And so every time I go, I've got a list of, okay, these are the people I've met that in this place. These are the people I've met here. And, you know, oh my gosh, that is probably one of the biggest awkward moments that I have is when I've met somebody 3 or 4 times and I can't remember their name.
Right. That's why we brought him in. And then we're also going to do speed dating. So you'll remember everybody's names. And then we put you face to face with one another so that you can continue to solidify the relationship. Everybody feels that way, Kim. You are not alone.
We saw Ron in the Bahamas. We were at a Tony Robbins Platinum Partner event. There was 250 of us there. He came in on one of the evening sessions and literally went through just while we were like hobnobbing around, he was like looking at each person's tag at their name. And then he went back up and anybody he didn't see, he's just like, what's your name? What's your name? And then an hour later had everybody stand up and he went through to every single person, 250 people in the room with not their first and last name, but their first name. And as soon as he said it, they sit down. And once in a while he gets to somebody who's like, I'll get back to you. But by the end of it, every 250 people,
it was jaw dropping.
I was like,
he's getting on our stage. Is what
wow. Yeah, I think he's at like the Guinness World Record for something with memorization, but
he's pretty cool.
He's amazing. So I'm very excited about that. It's an incredible networking opportunity. The relationships that are built there between the networking and obviously our speakers are just absolute top notch, obviously. And then the mindset work that Jen does, sometimes people think, oh, mindset stuff, but I'm telling you what, I already know for a fact that is one of the reasons our students have so much success. It's not just the instruction and the coaching, it is that too. But when you get rid of whatever's going on behind the scenes that's keeping you from moving forward, when you get rid of that, it's like you get to live the life that you want, which gives you the courage to go do the scary things, which are not scary once you've done them, but when something's new, yes, it's nerve-wracking to do something for the first time. Anyway, we just highly recommend it. The relationships you'll build there they'll blow your mind. You have lifelong friends.
Can you say that website again?
It's wowcon.com, WOWCON.com.
Okay, and we do have a question. Tim, hey Tim. Go ahead and ask your question. You can unmute if you'd like.
Oh, there we go. Hello, can you hear me?
Yeah, we can.
Okay, I'm with my
Tim.
wife, April.
Hello.
Hi, April.
Hi, April.
Hi.
So we are very new to apartment syndication. We've been studying up extensively for a couple of years, and we're finally ready to go for it. So we've been shopping and we've been underwriting a lot and learning a lot through that. We have a deal that we're very interested in, and I'd like to know your opinion. It's a 48 unit. They have a current Fannie Mae loan with a 3.6% that we can assume.
Oh,
9 years remaining on it.
Yeah, 9 years remaining on it.
9 years.
9?
Okay.
Mhm.
okay.
Yeah. And however, so they owe 1.82 million, and the broker is saying he's thinking it's going to go for around 3.8, 3.9, which means we need to raise 2 million or 2.1 million in capital. So what is your opinion? What do you think about this?
So far sounds
Really
compelling.
good. Yeah. Do you have it under contract?
No, not yet. Their Wednesday, next Wednesday is their accepting offers date. And so my thing is, so we've also been, during this whole process, I've been reaching out to everybody I know and collecting potential investors. And so since this is our first time buying something with other people's money, like I have so many questions, like how do you have your agreement with the investors? Like what kind of contract do you have your attorney do that? And then what else do we have? Like, I mean, let's start there. How do you do that? It's in that book?
Yeah, you need to get a book. You absolutely need to have
We
that.
just got that.
Good. You
We
get
just
start
started
reading that.
reading.
Yeah, start reading that. I always caution people against talking to investors or anybody with any specificity about any deal until you have a signed purchase agreement.
Oh,
I was
Yeah.
just gonna
That's
say
why I
I
was
was
asking if you had
curious
it under
what
contract.
market it was in, but I was like, I am not gonna ask you what market's it's in because I don't want that
Yes.
information to
Yeah.
go out.
And you might be pushing your deal on somebody else that's going to go get it, and it's easy to
right.
figure out
I
where it
thought
is.
about that too.
Yeah.
So,
So-
a couple things come to mind, Tim, on that, because we have in our academy, a lot of our students start with smaller deals. They do joint ventures and then they move into syndication. And one of the things that we're always encouraging them to do when they're working on the smaller stuff is, man, be building those relationships, which is why we're paying a lot of money to have Ron White come and work with everyone. Be building those relationships as early as possible, because when you go to do your first syndication, and you're probably going to do a 506B, is common for people to do as their first one. If your Rolodex isn't ready, it can be a very stressful time, because you can't pitch the deal to anybody that you didn't already have a pre-existing relationship with when you put it under contract. So there's a couple ways, I don't want to say around that, but there's a couple of things that you can think about as you guys are looking at doing this potential deal. One is just really truly make sure that your Rolodex is as deep as it can be before you go in, guys. I don't wish the stress of this on anyone. You're going to face it no matter what, but I'd like it to be less if possible. But the other possibility, like that's something that we do, Jen and I will go in as like a co-GP with someone else. So if we know someone that we've been watching them for a couple of years, they're solid operators, but they don't have the number of relationships that we've built over the years, we will come in and we will partner with them on the capital side, and then we'll have some other role in the deal. But it allows them to capitalize on our network, because we will start reaching out to all the people we know. So I just want you to be aware, as you're looking into that, if you don't feel really, really confident that you could raise how much is the raise? Like
2.1 million. So yeah, that's my other question. Like I have a good I know a lot of people, and I did have a rental property on my own for about 15 years that I did really well, but I did it by myself and I managed it myself. I don't want to do that again. I want to be, I want, I want to go much bigger, and I'll have a management company do that, and I'll be the general, partner to handle it. But so now, what is the importance of having accredited investors and
Yeah,
like,
that's you're not going to start there.
oh, okay. Okay.
What I would recommend is we have something called a pre-syndication agreement, and it's for people like you that are, don't have a deal under contract yet, but they want to have a relationship with a securities attorney. They want to be able to get some one-on-one guidance and strategy sessions on how they should be structuring the deal, what kind of exemptions are going to work with them, what kind of rules and framework they have to follow, and also understanding the importance of developing those relationships and how to go about doing it right now before you do get that deal under contract. If you want to know more about that, you can go to our website at syndicationattorneys.com, and there's a schedule of consult.
Okay.
Schedule a free consult with one of our staff, and they can tell you all about it and what it includes, but it's got a lot of free perks, and it will also get you onto our weekly masterminds. Those are amazing. I think that you can benefit by having a one-on-one consultation with me or the securities attorney, kind of giving you some guidance. Definitely the book is a step-by-step. It's going to talk about securities exemptions and those developing those relationships, why it's important, how to structure your deal. You're going to have a much better understanding of it after you've read through those chapters.
Great. Okay. We love that. We'll definitely read that. We started.
We
Now
scheduled the consultation.
Oh,
we did.
perfect.
We already scheduled it. Yeah. And now, so I thought that you had to have the money raised and ready before you wrote the LOI.
No.
Okay.
You have to have as a database of prospective
Okay.
investors.
So like
Yeah.
verbal agreements, like we're ready to go.
These are people you've talked to that said, yeah,
Relationships.
I'm super interested. Let me know when you have a deal, and you've already talked to them. You already know whether they're accredited. If they're not accredited, how they're sophisticated. But every one of our clients starts with a Reg D Rule 506B offering, because
What is that?
your friends and family will invest with you before you develop a track record. If you try to advertise, the first thing a stranger is going to ask is, how many have you done before? If you haven't done any before, you're going to need to bring somebody else into your management team that has experience and leverage off their experience.
Okay. Yeah, that makes sense.
So
Yeah.
the reason you want to do the 506B is it allows you to bring in up to 35 non-accredited but sophisticated investors, and that's typically your family and friends.
Oh,
Somebody with some savings and a job. They have to have some education or business background or degree or something that makes them capable of understanding this, what you're doing, and whether it's appropriate for them. So you've really got to pre-vet your investors and get that relationship established, so you have that information before you start.
Oh, wow. I didn't know that.
yeah. Awesome. so much to learn.
It is a lot to learn. And you know what, you guys, you're doing the right thing. You're getting educated about it. You're seeking professional help. And no matter what, it's going to be nerve-wracking and scary until you're on the other end of it. And that's just how it is. And if you want a different life, which obviously you do,
yeah,
that's just what you do, and you go for it. I will tell you, because we have an academy and we have all of these, different people, in addition to Kim, there's at least one other that I'd say is extremely public as far as being a syndication attorney. And we know, most of them from our students, from our coaches who coach our students. I will tell you for a fact that the other main person who we respect and stuff, isn't ideal for new investors. So if you are looking on the internet and you're seeing a lot of videos from Kim and then someone else, I will tell you that Kim, when you are new, Kim is absolutely the way to go, because they actually do take the time to lay the foundation for you and help you go through that, navigate through that successfully. Where our feedback from our coaches with some of our students going through syndication for the first time was that other firm, it's like they're better suited for people who've done 10 deals. But for the new person, they're just like, it's not a good experience.
Yeah.
I highly recommend.
A lot of those other people are charging like so much money. Like we don't have that. We're trying to get there. but we can't afford to pay what some of these other companies are asking, for mentorship or guidance, like we want to get there eventually, but we can't do it right now. So that's the whole purpose
Yeah.
for, we want this cash flow.
Yeah, you'll be in good hands with syndication attorneys. They're great,
Yeah.
especially great when you're just getting started. And then you can use them for life, and they're great.
That's our forte, is that we love taking people that have never done this before and really helping them understand what they're doing. If you've been to our website, there's a whole resources library with over 70 different articles, all on 1 or 2 pages on different aspects of syndication. We have our podcast, we have our YouTube channel, we have it's a very nominal fee to get into our pre-syndication agreement. And, so that just helps you get that foundation so that you're confident and you're doing the right thing when you get this deal. And just in case somebody's wondering, because I think you asked a really important question. I know we're going a little bit over and we usually don't, but I think we tell people to hire us after you have a signed purchase agreement, you've been physically to the property and you've reviewed the financials. And because then our statistics show you're 85% likely to close. So we don't draft those agreements. We don't form companies for you. There's no commitments or anything like that with investors until after you've done those 3 things and we've drafted the documents. So you can plan on, you need 90 days to syndicate a property. The first 30 days is going to be your due diligence, us drafting documents. And then the last 45 to 60 days is going to be processing the loan and getting your investors to invest.
Wow, that's great. Yeah, so we've already formed the company. By the way, we love your podcast. You guys have been great. We learned so much from you just listening to you today. So thank you for everything.
Yeah, because I thought that was good what you said about even putting in the letter of intent, even if you're gonna putting in way lower offer. Because we've been looking at deals and we're like, what they're asking for doesn't make any sense. There's no way this property is worth 10 million. They're in the negative.
Yeah.
So then we were like, okay, let's move on to the next. We were doing underwriting, but I think it's important, like you said, so we can at least show the broker what we're doing. I think that was
you'll increase your deal flow by doing that, because they're going to be like, oh, okay, so because a lot of people can make phone calls, a lot of people can watch videos on YouTube and get excited enough and have enough guts. I wouldn't be one of them, but to have enough guts to make some calls to brokers. So brokers are they're very hesitant with new investors, because a lot of new investors from their perspective waste their time. So if you will be the other person that actually shows them that not only did you take the time to look at the information they sent, that you actually analyzed it and you have a thought process behind what's driving this offer, you will change the course of your business forever, and you will get the deal flow that will help you get a deal.
I love that. I love it. I definitely have called a lot of brokers and had some really good conversations with them, and I'm learning from all of them too. So
yeah, that's awesome. Congratulations, you guys.
Yeah, thank you.
Thank you.
One last thing I want to say is that having a coach in the beginning is extremely important. All of our successful clients that have gone on and done more than 1 or 2 deals have all started with a coach. They've all accelerated their practice because of having a coach. They've avoided $100,000 mistakes with other people's money because they had a coach. And I know it's a big investment, but it's also, you don't decide that you're going to be an accountant and say, but I'm going to learn it all on the internet and I'm going to read some books. Right? You've got to pay your dues, and you have to learn, and you have to find people that will teach you how to do it. And so, this is part of what Jen and Stacy offer. Having a coach will definitely accelerate what you're doing and help you avoid mistakes. I can't stress that enough. Our clients that try to do it alone without coaches, they'll do 1 or 2 deals, or maybe they'll do 2 or 3 deals over 4 or 5 years. The ones, some of ours that started with a coach, one of our clients, long-term clients, Bill Brancucci, talked about the fact they started 6 years ago buying $3 to $5 million properties. They had a coach. They started in a coaching program, And now they're buying $30 to $50 million deals, so just 6 years later. I've got some other clients. We just interviewed self-storage clients, and they had a coach. They started out, they did multifamily, now they're doing self-storage. They've got thousands of self-storage units now within 2.5 years, $10 million later. But all that didn't start just trying to do it themselves. So it is an investment, but it's an important investment if you want to do it, and versus just trying to flounder around and not get where you want to go.
I completely agree with that, Kim.
Yeah.
You think about a doctor in residency, they go to college for all those years, then they got to go do residency. And that's why we set the academy up the way that it is. It's a 3-year education which it's also while implementing. It's probably better than any education you would get out there. But yes, if you don't have both, if you don't have the information and the implementation, you'll start.
Somebody could have, prodding you along and making sure you're doing what you should be doing and not getting distracted and doing the wrong things. That's so critically important. When I started my law firm, I immediately hired a coaching program.
Same.
Absolutely.
We've probably spent what, $750,000 over our life.
Absolutely. I will tell you this.
Mentorship and coaching.
I was one of those do-it-yourselfers back in 2003. I will just share this openly. I lost $80,000 in one day because I was too arrogant to hire a coach, and also didn't think I had the resources. And then I shocked the hell out of myself when I figured out exactly what was available to me to go get that education. And once I did, it was a game changer. So $80,000 in one day, that's what could happen. And that was on a single family home, y'all. It's embarrassing.
Attorney on our own syndicate, and that turned out to be disastrous.
See? Yeah, it's hard. One of the things that we've just made the decision for ourselves, and even when it's hard, because you don't always have a lot of capital, especially if all your capital is out in deals, you don't always have a lot of liquid, but we've always made the decision, not always, the last several years, last 5 years, we've made the decision anytime that we could leverage someone else's learning curve to shorten our learning curve
and the pain,
we're making that investment, because every single solitary time we trim 5 years off of our learning curve, we avoid the $100,000 and $200,000 and $300,000 mistakes that other people are making. And so we're a huge, not only obviously we have a coaching program, so I know that sounds self-serving, but we believe so strongly in it. Even if it's go get education with someone else, granted it's not going to be as good, but that's okay. Go get education. That investment, you have no idea how much money that will not just save you from mistakes, but help you make.
Yeah.
But it's scary to make an investment like that when you haven't done it yet. You don't know for sure, like, is it going to pay me back? If you're gonna do it, yes, but God, the mistakes you can make in apartment investing they're so expensive.
Sometimes
we just don't want that for anyone.
Sometimes people are afraid to make that investment because they maybe possibly don't believe in themselves that they'll be able to get the results. And I experienced that myself when we went to go enroll into Tony Robbins Platinum Partnership. It's $150,000, and handing the card over, I was like, oh my God, what if we don't do this right? But it increased our net worth by 1.5 million, and that's a just 10x
year
just off of that first year with him.
Yeah.
So second year, I threw my credit card. Let's go. So it's like, you got to look at the return on the investment because of exactly what Stacy said. You cut off so much learning curve. And then when you have somebody that is with you, that's like, okay, you got to do it by the book and do it legally. That's going to protect your investment. So, you need the coaching and the protection.
We have officially broken the record for the longest podcast recording we've ever done, because it was so exciting and there's so much good information. And
a lot, actually.
We talk too much. I'm sorry.
Sorry, we just have a good time. We really just want to help people. Like, we just want to get poured out.
Because that's exactly, you're asking questions that everybody else has. And so it's good for everyone on the call to hear it. So anyway, we do have to sign off. Website one more time for the conference.
Wowcon.com, WOWCON.com.
Yeah. Okay. There's early bird specials until what?
Yeah.
December 20th, and you get a +1, and it's, I think, $300 cheaper than general admission.
Yeah.
December 21st, it goes to the regular pricing, but a couple weeks where.
We also have a free resources page if you want to go learn about what we do, warriorsofwealth.com, like 7 videos that just give our entire blueprint away. So if you're interested in that, warriorsofwealth.com.
Excellent. And if you want anything to know more about us, syndicationattorneys.com, check out our resources page. There's a ton of free stuff there, free educational materials. We would love to have you check it out. Definitely text the word syndicate to our phone number, 844-796-3428. Get your copy of a free book mailed to you. And thank you so much, Jen and Stacy. This has been amazing.
Thank you for
And
having us, Kim.
look forward to seeing you in February.
Absolutely.
Yeah,
Can't
same.
wait.
All right, have a good one.
Bye, guys.